Now, last Thursday, the United States hit its debt ceiling of $31.4 trillion borrowed on credit of the United States. This is a huge issue because it means the United States could actually default on this debt, which would be catastrophic for bonds, the stock market, and could cause even more interest rate hikes in the near future. This is because if the United States defaulted on this loan, their credit rating would go down significantly, making it a lot more expensive to borrow this money. Think of this like a credit score. If somebody has a bad credit score, it means they are unreliable when borrowing money, meaning it would cost them a lot more to take out a loan in the future because of this unreliability. What's up, everybody? My name is Ben, and today we're going to be diving into how the United States has hit this debt ceiling and how it is going to impact you personally. If you do enjoy this video, I would really appreciate it if you would hit that subscribe button below. The majority of the people who do watch my videos are not subscribed, and it's 100% free, and you can always change your mind later. So the current US debt ceiling is at $31.4 trillion, and in 2011, we experienced a very similar situation to the one we are in right now. During this period of time, the stock market dropped 14% in just 4 weeks, and we were only days from defaulting on our debt. With the economic conditions we are experiencing right now, this is an even worse time to be experiencing something similar to 2011. 2022 was already a pretty bad year for the market, and we're beginning to see companies lay off people, so seeing the market take another massive hit would be catastrophic for our economy. Now, in order for the United States not to default on this debt, both the Republicans and the Democrats that are in control would have to agree to raise the debt ceiling, as they've done multiple times in the past. With that being said, in the past, when we have been close to defaulting on this debt, we have seen Republicans almost hold this hostage and not pass the bill to raise this debt ceiling in order to get Democrats to stop spending so much money. And this is exactly what happened in 2011, which almost caused our economy to collapse. Now, when I say that, it may sound like I'm calling the Republicans the bad guys in this scenario, which is not true at all. I'm personally a big advocate for our country to stop spending so much money. This is because my personal outlook is that if the US does not stop borrowing so much money, the US dollar and the US economy are bound to reap unprecedented consequences for the actions of borrowing so much money that could never be realistically repaid. Currently, the top 3 expenditures for the United States is healthcare, Social Security, and defense. If the US did end up defaulting on this debt, they may be unable to pay out these benefits, which realistically could cause a temporary halt in Social Security benefits and healthcare payouts. Additionally, Kevin McCarthy has already come out on behalf of the Republican Party and said that they will only agree to raise this debt ceiling if Democrats agree to stop spending so much money. This could even include raising the age that someone could benefit from Social Security benefits from age 65 to 70. Now, this would upset a lot of older Americans because it would mean that they would have to wait longer before being able to draw from these benefits. However, from a logical standpoint, this would not necessarily be unfair. The last time that the age requirement was raised to receive Social Security benefits was 1983. Now, in 1983, the life expectancy of a US citizen was approximately 74 years old, compared to today, where the life expectancy is approximately 77 years old. Additionally, Republicans may also advocate that Medicare eligibility be raised from age 65 as well. Similar to Social Security, the age that one can draw these Medicare benefits has not been changed since 1965. As a result of the life expectancy increase in America since 1965, I would still go as far as to say this is not necessarily unfair. So to tie all of this together, as we get close to defaulting on the national debt, we will likely see the stock market decline in value. We will likely see this in advance of the possibility of defaulting on this debt because the market really hates uncertainty, and it also is forward-looking. This all sounds very grim, but I am still bullish for the US economy in the long term. We really just need to find a way to stop spending so much money. We faced a lot of issues in this country that we've gotten over eventually, so I don't see this being any different under one condition. And that condition is that we actually find a solution to stop spending so much money instead of digging the hole of our debt deeper and deeper. If you are curious about this national debt and would like to see how bad it actually is and how fast it's actually increasing, I will leave a link in the description to the national debt clock. Lastly, my personal investment strategy going into this absolute economic hurricane is that nothing really changes other than the fact that I may buy more index funds if market conditions get really bad. Like I said, I'm confident in the US economy long term, and I'm personally a long-term investor, and by that I mean I don't plan on selling any of my investments for probably 30 to 40 years. So I'm confident by that time we will have resolved the issues we are experiencing today and will be fighting a whole new set of problems. However, if you're a short-term investor and you plan on or need the money that you have currently in investments within the next couple of years, I would 100% approach this a lot more cautiously. From everything that I've explained, you can probably tell that I am optimistic for our economy long term. However, there is definitely potential for things to get really nasty before they get better. This is 100% dependent on the fact that if we do actually default on our national debt, this would be something that has never happened in US history before, meaning we would be facing unprecedented consequences. Now, I really appreciate every single one of you guys who did watch until the end of this video. We are getting so close to 100 subscribers, so I would really appreciate it if you would smash that big red button below, and I hope to see each and every one of you guys guys in the next video.